If you leave your money sitting in a standard checking account, it actively loses purchasing power over time due to inflation. The S&P 500 acts as a defense mechanism against that inflation. It's an index that tracks the collective performance of the 500 largest public companies in the United States. By the end of this video, you will know exactly how to buy your very first index fund right from your phone, step by step. To follow along today, you only need two things: an active brokerage account like Fidelity, Robinhood, or Schwab, and some cash already transferred and ready to invest. Moving your idle cash into the market officially converts you from a simple consumer into a long-term equity owner. Go ahead and open your trading app. Look down at the bottom menu and tap the search icon. In the search bar, we are looking for a specific fund, the Vanguard S&P 500 ETF. Every tradable asset has a ticker symbol. You can think of this exactly like an airport code. Just as JFK routes your luggage to New York, the ticker symbol VOO routes your money directly to the Vanguard fund. Select VOO from the results list and then tap the Trade button to bring up the order screen. Knowing your exact ticker symbol ensures you are buying the precise financial product you intend to, rather than getting lost in a crowded market of similar-sounding names. Once you are on the order screen, look toward the top right corner. You'll see a small drop-down menu labeled Shares. The default option here is a market order. This setting allows you to purchase whole, complete shares at whatever the current live market price happens to be. Select Buy in Dollars to purchase fractional pieces of a share based on the cash you want to spend. In that same menu, selecting Recurring Investment executes dollar cost averaging, automatically investing a fixed amount on a regular schedule, regardless of market prices. Fractional shares and recurring trades allow anyone to build a position over time, regardless of how much capital they have at the start. Let's look at one more option, the limit order. This lets you specify the exact maximum price you are willing to pay for a share, ensuring you get a discount if the market dips to your target. However, there is a catch. Placing a limit order reserves your cash, resulting in the locked buying power shown here. You cannot use that specific capital for any other trades while the order waits to execute. For this first trade, let's keep it simple. Return the setting to a standard market order. Type 1 for the number of shares, and double-check that your estimated cost is lower than your available cash balance. Tap to review the order summary. If everything looks correct, go ahead and swipe up on the screen to submit the trade. That physical swipe effectively executes your entry into the live market. Congratulations! You officially own a fraction of the 500 largest and most profitable companies in the United States. This display illustrates a harsh reality of the market. There will be days, or even months, where your portfolio looks exactly like this, losing significant value in a short window. This chart shows the S&P 500 over several decades. While the short-term drops look severe up close, zooming out reveals a long-term upward trend that covers those temporary dips. To handle those inevitable down periods, your best strategy is to automate your investing. Set up a recurring order, set it and forget it. Financial independence is built by acquiring quality assets and holding them through years of economic growth.